What's up? My name is Dave Cousins, co-founder of the Credit Team, and I've been educating millions of people on how to get access to their hidden credit report and find the violations and leverage the law to be able to then craft a letter to increase their chances of getting deletions just like this, and like this. But things can get frustrated when it comes to credit repair, but things change when you have a specific goal. Now, when you have a specific goal, then things will shift because if you don't have a goal and you only want to fix your credit to have a better credit score, then that's when the frustration kicks in. Because if you haven't disputed before, Experian, TransUnion, and Equifax like to play games sometimes. So when you send a letter to Experian, when you send a letter to TransUnion, when you send a letter to Equifax, and they respond back in a certain way, some people give up. But I want to help you not give up because when you have a goal that you're trying to get, as far as let's just say you want to buy a house, or maybe you want to get access to funding, or maybe you're trying to fix up your credit because you want an apartment, whatever that looks like, whatever that goal is, I want to help you because everybody's goal is a little bit different. And as far as fixing credit, when you have a specific goal, then you don't need a specific, well, you don't got to have perfect credit on based on the circumstances of why you're trying to fix your credit. So let's just break it down. For an example, if you're trying to buy a, let's just say you want a house, right? The goal is to get a house. Well, there are certain programs that are out there where you don't need perfect credit to buy a house, right? You don't need to have perfect credit to buy a house. Yes, the higher the credit score, the better the interest rate. Okay. Now, now, let's be clear. Yes, I want you to have the best credit so you can have better interest rate. But if you think about it like, all right, I'm getting this house, and then let's just say a year from now, I can refinance if it takes me a year to, let's just say, get the credit score 750, 780, or whatever that looks like, right, to get better interest rate, right? So I can pay her a lower monthly payment. But you can get a house with a 650. What's up? You can get a house with a 660, 670, 630 FICO score, 640. There are different programs out there that can help you qualify for that, right? So one of the things when it comes to buying a house, they look at your FICO 5, FICO 8, home loan or home FICO score, right? Or FICO 3, FICO 5, and some banks a little bit different, right? So one of the things they do as far as like your and there are other programs now that are out there too where they look at your Vantage score as well. So things are changing up. But one of the things they do is pick out your middle score. So for example, if you had a 640, right? Credit score on one specific credit bureau, and then you had a 625 credit score, and then you had a 609 credit score, right? FICO score, right? They're going to pick this specific score, the middle score, and based on this middle score, they're going to use it to qualify you based on that. And there are certain programs out there. Like for us, I was in the military and we had the VA loan. So we had to have certain programs where we had to have a 580 or higher credit score. And there are other places where they required a 620 credit score. And that's the one I had to have, right? So I had to have a 620 or higher to be able to pre-qualify for a VA loan. So depending on the type of program out there, right? FHA loan, their programs, well, the FHA loan, based on their specific requirement and what you need to put down. All right. And they have down payment assistance, right? Where if you have to put down a specific percentage, there are programs out there where there are that they can help you put money down on the house. But as you can see, 640, 625, 609, now you can see that, hey, I don't have to remove everything off my credit report to qualify for a house. I don't got to do certain things to be able to qualify for a house. But of course, you can't have all these collections. You can't have all these charge-offs. You can't have all these different things, late payments, okay? They look at certain things, okay, as far as your credit. But when you identify that, hey, I'm trying to buy a house. And when I talk to a loan officer, or when I talk to a credit repair specialist, or when I talk to somebody, I don't got to have the perfect credit to be able to pre-qualify for a house, because, as if you're unaware, it's based off of your score, it's based off your debt to income ratio, and it's based off of how much money are you making based off of the bills and everything that you have going on. So you don't got to have a 720, 780, 750 to get a house, right? It's based off of how much money you're making, how much debt you have, and of course, your credit score. So they put all that into factor. But of course, one of the requirements is to pre-qualify, is to have a specific credit score. So if this is the goal and you understand that, hey, I want to get a house, then we have to do the research of, all right, what program best fits my needs to be able to pre-qualify for this house. And let's go look to see what houses, or maybe once you figure out, all right, this is my credit score, or if I apply and they reject me, all right, what is the credit score that I need to pre-qualify for this specific program? So I know that, hey, this is my, let's just say I qualify for a 400 or 500 or $350,000 house. All right. Focus on the specific goal, right? Rather than focus on, for an example, I need to get a 750, or I'm just trying to have better credit, because it takes time. It takes a lot of discipline to have better credit. It's persistent sending in letter after letter to remove those negative accounts off of your report. Okay. And it might take you 6 months. It might take 12 months. It might take 24 months. And that's where the frustration kicks in. But if you have a specific goal and that you want a house, then things change. Okay. Now, let's just say, for an example, you want to buy, or you want to get access to funding. So you're a business owner, aspiring entrepreneur, or you want to start a business, right? To get funding, right? Typically, right, the credit score to get funding is a 680 or higher, right? So you want to have a 680 or higher credit score. So, or FICO credit score, right? So there are banks out there that, based on, what you have going on, your credit profile, they want a 680 or higher credit score. That's the minimum. But before you apply for a business credit card, or get funding based off of your goal, I would tell you to build a relationship with the bank first. Okay. Let's just say you're at 650, 640, right? And you need some things to be removed off your report. You got to pay down some credit card debt. What you want to do first is create the relationship. So whatever bank you're at, right? If you have a bad relationship with them, you had overdraft fees, you had things, you had charge-offs, whatever, right? With that specific bank, go create a new relationship with a new bank. See if they have business credit cards available. If they offer business credit stuff for you, see if they have that. Check. Now, I would tell you to build a relationship with the credit union first before you go after the big banks, because it's easier to craft a relation. Well, it's easier to get approved with a credit union versus a big bank, because the person, let's just say the manager there, has more power than a traditional bank, where they push out your applications, right? The bank manager has the power, I believe, most of the time, have the power to approve you for personal credit card, business credit card. Okay. So craft that relationship first, right? Put money in the business account, have the money coming in, put it in the savings account. And then once your credit score is higher than a 680, then apply. Ask them, all right, when you have the conversation with the actual credit union, or you open up an account, have the conversation, right? Have the relationship. Talk to them. All right. For these specific programs, for a business credit card, what are your requirements? What are you guys looking for? Right? Have the relationship, or have the conversation, because they'll most likely would tell you, all right, for this equipment loan, you need to have this credit score higher. And we pull from Experian, or we pull from Equifax, or we pull from TransUnion. To get a business credit card at 0% interest, all right, you need to have this specific credit score. You need to have this going on, and we would like to see whatever, right, on your profile. So you know that going in, I need to have this specific credit score with this specific credit bureau. Okay. And then you can have multiple conversations with other credit unions. So for an example, let's just say there are credit unions that only pull from Experian. There are credit unions that only pull from Equifax. There are credit unions that only pull from Treasury. Now that, hey, I had the conversation with all these specific credit unions. Now, once one of my credit scores is good enough, I can go to that specific bank that pull from that specific credit bureau because my credit score is above the threshold of what is needed to get access to funding.